Welcome to Morris Money, where we give you stock tips in under 5 minutes. I'm your host, Morris Willie. Today, we're talking about why Hanesbrands has dropped more than 25% in the last 3 months. Hanes has been grappling with supply chain logistics headwinds. Cost inflation is putting pressure on the consumer goods company's margin performance. Apart from these, unfavorable foreign currency rates are also hurting Hanesbrands. That being said, focus on the full potential plan is a tailwind. Let's take a look into this. The company is grappling with higher inflation with affected gross margin performance during the first quarter of 2022. During the quarter, adjusted gross profit came in at $585 million, down from $605 million reported in the year-ago quarter. Adjusted margin was 37.1%, down almost 305 basis points due to the expected impact of increased inflation and more than planned strategic investment in expedited freight to support new retail space gains and product innovation. Adjusted operating margin of 11.1% contracted nearly 280 basis points thanks to inflation and expedited freight costs. In its last earnings call, Hanesbrands highlighted that it has been operating amidst a tough global environment for the past 3 months. The company is grappling with COVID-induced supply chain logistic headwinds, the war in Eastern Europe, and inflation exerting pressure on costs and consumer budgets are headwinds. In the past 3 months, management saw escalated challenges in the operating environment globally, resulting in an incremental $65 million of net cost headwinds compared with the previous outlook. Owing to its international presence, Hanesbrands is exposed to unfavorable currency fluctuations. The weakening of foreign currencies against the U.S. dollar might require the company to either raise prices or contract profit margins in locations outside the country. The unfavorable currency exchange rate was a 200 basis point drag on the company's sales growth during the first quarter of 2022. For the second quarter of 2022, net sales from continuing operations will likely include an adverse impact of $40 million from currency movements. For 2022, net sales from continuing operations are anticipated to reflect a currency headwind of $125 million. Certainly, the volatility in exchange rate is a certain. Hanesbrands is progressing well with its full potential plan, which was unveiled in May 2021. The plan includes growing the global champion brand, reigniting innerwear growth, driving consumer certainty, and focusing on the portfolio. Strength in the company's activewear and innerwear categories are also aiding growth. That being said, let's see if these upsides can help the company counter the aforementioned hurdles. Shares in Hanes have plunged 25% in the past 3 months compared with the industry decline of 7.4%. This is obviously shocking, but I've taken this time, as we've seen this big dip, to go ahead and buy some more stock. I started buying in at Hanes around $15. Now that it's around $11, high $10 range, I've been buying up more stock because I see Hanesbrands as a strong player in my portfolio for years to come, and it's a dividend payer. So I think it's definitely something you should look into. But let me know what you think below. What do you think about Hanes, and what do you think about this recent dip? Are you selling the stock, buying the stock, or holding on to the stock? Let me know what you think below. Please don't take this video as financial advice, and thank you for watching Morris Money.